through what happened in the week gone by. We've managed to hit a fresh record high for ourselves on an index level. Lot of individual stocks as well, which participated in the rally all through last week. And we've managed to, hit a high for our 5 consecutive sessions, but we've underperformed our global peers. So if you were to take a look at what happened, say, for the Shanghai index, what happened in the US markets led by the performance in Nvidia, we definitely fell a little bit short. But yeah, it's good to see that we've had straight consecutive days of gains and FIIs are finally back to being a buyer in India.
See, Aisha, frankly, the headlines are good. Global markets are strong. Indian markets are making a new high. FIs are back. There's nothing in the global setup or the local setup which will generate iota of any kind of an anxiety. But that is not translating into any large, powerful move or a trending move. It's like a subtle move where the markets, the thunder is missing and the market action is actually very dull. This week, well, it may be a long week, it may be a 6-day trading week, there is FNO expiry in the middle of it, but I don't anticipate or expect that the index per se is going to give you a very powerful kind of a move. And that really has been the basic setup, that you are crawling higher and there is a gradual churn within large and mid-cap stocks. So the thunder is missing, there is a crawl up, there is a gradual churn, and there are no pressure points and very few points of excitement. So this is typical time-wise consolidation which markets are entering into. The setup, I think, is favorable as far as the big picture is concerned, simply because global cues are stable, commodity prices are benign, and in terms of the market setup, periodic correction is kicking in mid and small cap stocks, which is giving this market a time to churn. So there's nothing wrong with it, but just because the setup is great, that does not mean the price action every day would be like, rara.
Yeah, price action might not have that thunder for now, but at least there are individual sectors and segments which have managed to outperform. Of course, Nifty, as we pointed out, for 5 consecutive days was hitting record high levels, but separately it was real estate sector, auto as well as pharma that managed to hit all-time high levels in the week gone by. In fact, you'll be a bit surprised to know perhaps that the best performing segment so far this month has been the PSU banking space, because it's had a very volatile move. There were days where it was completely down and out, but by the net basis, it seems like PSU banks have managed to gain 13% this month itself, followed by energy. Of course, OMCs were having a great run. Real estate, auto and pharma follow suit. IT too has managed to gain around 4% thanks to the Nasdaq rally that we saw. On the losing side, however, you of course have FMCG, which has been on the back foot, and the latest pain point has become Asian Paints, because that has been underperforming, and then banks clearly have been on the back foot all round. And individual names also, if you see in terms of the PSU basket, there is some semblance which has happened now, Nikunj. RVNL, Mishra Dhatu, IRFC, SGVN, these were the stocks which are every day having that 10% move for no reason. Finally, they are correcting and there's some semblance.
It's only when I looked at the data, I realized the auto index is up 7%. You look at the real estate index, that's up another 6%. You look at the bank Nifty, which was supposed to come back, it got a support from SBI, it's got a support middle of the month from HDFC Bank, that is not doing its bit. So in terms of in market, the market is not strikingly different than what we, let's say, saw last quarter and in the month of Jan, but there are cracks which are started opening up clearly in select PSU stocks, and I think that trend is here to stay. But what concerns me and what I think is puzzling is that there is just no follow buying in private banks. Everybody is saying they are cheap. I think market either is testing patience, or markets perhaps feel that in the second half the slowdown or somewhere what's happening on the liquidity front is going to have impact on their NIMs, because the underperformance in private banks now is very, very stark. So that's really one large pain point for me in the market. And second, I think this is where you need to be a bit watchful, mark my words. I think best of the auto gains in the near term are behind us. There is a slowdown which has actually started. I mean, I look at very basic data. Tractors are slowing down. Footwear sales are slowing down. QSR sales are slowing down. Real estate is having a base effect. Luxury cars, if you look at the data, what you will get this month, the base effect has kicked in. So I think this time auto numbers are important and they are crucial, because December was that year-end effect, January is the beginning effect, Feb is the real deal for me. So this time the auto dispatch numbers for an index which has done so well, I think would be very, very crucial. So we don't talk about it, but since auto dispatch numbers would be coming later this week, I think for me, auto becomes this go-to sector for next couple of days.
Yeah, you'll have the series expiry as well, not just auto sales, but GDP as well as PMI data too, that the market, I guess, is going to digest.
There's nothing large in terms of a forward-looking number this week. There's nothing large in terms of a forward-looking event this week. Frankly, from a market standpoint, GDP number just is not relevant. Aisha, there was a time in 2013-14, we used to only discuss inflation and GDP. Nobody bothered about earnings. That's a setup. Today, GDP is just not bothered. I mean, everybody would look back and say that, oh, it's a backward-looking data. It tells you about last quarter. Who's interested in kya ho gaya? We are interested in kya hone wala hai. So GDP is actually just not the relevant data, which in a sense would just be doing things. The communication, I think, is very well established that we are in a great spot. GDP is doing well. They're earning upgrades. So inflation or a GDP beta is frankly passe, at least in the near-term setup. So we can safely ignore it.
Okay, but there are company-specific actions as well this week. So, of course, you also have Vodafone that will fundraise. So that's something interesting to track. Bajaj Auto's buyback opens. So keep an eye out on that. And ICICI board will meet to probably consider the delisting of ICICI Securities. So some company-specific triggers there, even if at the macro level the data might not move the needle. But talking about moving the needle, that's the commentary that we got from Warren Buffett as well over the weekend in his shareholders letter, the annual letter that we all look forward to. And as always, pearls of wisdom coming in from there, when he believes that there is not much right now that excites them. He offers to say that there is probably the right time to expect no eye-popping performance this time around. There's only a handful of companies in the country that are capable of truly moving the needle at Berkshire. What they would rather do is have that cash pile ready, and that has of course scaled to a new high, and they believe that they will, they will rather put money in a place which is expected to have a higher return rather than just having an average return, because that is what Berkshire Hathaway stands for. But Nikunj, of course, he also paid a bit of a tribute to Charlie Munger as well. He passed away, and he talks about how he was the architect and great contractor of the entire company.
See, when we read history, and when our coming generation will read history, Buffett and Munger friendship, or their partnership in a sense, would be perhaps the supreme friendship of two individuals, how they can come together, and how in the investing world where everybody has a different view on everything, how they were able to build a franchise which is built to last. And they in a sense have they had rather, I'm so sorry to say the word had, or they had the word, they had the longest partnership which any two partners actually can have. So that's Buffett on Charlie. He's not shying away from the fact that, look, Charlie was the architect. Charlie was the one who gave him this mantra, which in a sense is the cornerstone on which Berkshire Hathaway has been built, which is that you buy a good business at a fair price. Before that, Berkshire Hathaway, in a sense, or before that, Buffett would always look at buying bargains and value companies which are available below the intrinsic values. That's Charlie's contribution there. But in this time's newsletter, is there anything strikingly different? No. They're not talking about any large opportunities anywhere. They're talking about seldom things which are available. In fact, the communication is very clear. The magical track record of Berkshire Hathaway from these levels in the future is unlikely to continue. There is no mention on AI actually. I was hoping that there would be some mention on AI, because in the past explicitly Buffett's talked about Bitcoin. So there is no large mention about AI. He does talk about the fact that excepting US, there are no large opportunities which he can see in the outside market also. This he's saying at a time when they've gone to Japan. Berkshire Hathaway a couple of years ago has gone to Japan, and they've really shopped a lot there. Now you have to respect the fact that Berkshire Hathaway is a US company, so their view would of course be limited to what the understanding of business is. There is not even an iota of mention on India. There's not even an iota of mention on anything else which is happening in the world. And that $150 billion of cash pile, what they're sitting on, he says the same, that you should buy the fear and sell the greed. When there is a financial distress, I'm going to be using my cash pile. But $150 billion is almost like 65% of the market cap of Reliance. That's the kind of market cap, or that's the kind of cash they're sitting on. But unfortunately, he's not finding any opportunity to deploy that cash.
Yeah, and sitting at a record high cash pile. Also saying that